Good afternoon. This is Tom Aspray with the Viper Report. It's Friday afternoon, March 8th. Back in the snowy Northeast. This is the picture I took as I left Florida in the middle of the week. Needless to say, it was gorgeous. Mid to high 80s and lots of R&R, but the market started to move early this week and it was time to get back to business. It's about 20 minutes before the close. It's been a rough day on Wall Street. You can see the advances decline are negative, but they've actually gotten a little bit better. Overall market averages are taking it pretty hard. Dow is down 102. I believe it was down 250 at one point. S&P 500 down 15 points, 0.5%. It was down over 1%. The Russell's been hit the hardest this week. It's come back from its early lows. For the week, the Russell has been down about 4.5%, with the Dow Industrials and the S&P 500 losing 2.5%. So it's been a tough week for investors. Let's look at the charts. This chart of the IWM, that's the iShares Russell 2000 ETF, shows that on the 5th of March, that was Tuesday, the AD line dropped below its moving average, turning it into the corrective mode. You can see today's actions, it's down near the lower Stark bands. That makes a rebound likely next week, or at least stabilization of prices. Up until this week, this was the Viper AD market trend. Daily, weekly, and monthly trends were all positive, as the daily trend turned positive on January 4th. Had been positive since then. You can see this chart of the Spider Trust, the SPY, that tracks the S&P 500. When the AD line turned positive here in early January, staying positive throughout this ride, turned negative on Wednesday, a couple of days after the high on Monday. It is now in the corrective mode. We have been tightening stops on existing long positions and not doing any heavy new buying, as there were signs, as I said in last week's report, that there was the market was tired as it was losing its upside momentum. The negative readings in the Russell 2000 AD line, as well as the S&P 500 AD line, were confirmed by the action in the NYSE. This is a chart of the NYSE All AD line dropping below its moving average, as well as below it in red is the NYSE Stocks Only. It turned negative a day before the All AD line. The weekly analysis is still clearly positive, suggesting that this correction should be a buying opportunity, but clearly there's no signs that it's over yet. This short-term chart of the S&P 500 suggests a bottom is trying to form. That should set the stage for a rally back towards the 2770 area, maybe only 2750 next week. But I'll be watching the advanced decline numbers, because on that rally, unless it is very strong, we'll want to become even more defensive, as the odds will then favor a further decline. In a separate email, I'll be sending out a survey that'll look like this, trying to determine the interest level of some video instruction online. I'm thinking of just short sections, 15 minutes to a half an hour. So this questionnaire kind of gets your ideas of what you might be interested in. First of all, if you're interested in them at all, what kind of topics you might like to follow, what times work best for you. I'll be sending that out probably Sunday morning. Please respond if you are interested. There's no obligation. They're totally free. They're limited to the first, 80 or 100 people that sign up. So I hope you'll take the time to respond to this. It won't take very long. Of course, if you're interested in regular commentary and specific buy and sell recommendations twice a week, I hope you consider one of my premium services. Go to viperreport.com if you're interested in ETF. click the ETFs link, or in the Viper Hot Stocks report for individual stocks. Also, I'll be starting a new section of mentoring in the advanced decline analysis next month. You can get more information here if you'd like to be able to learn how to spot market turns in advance. Hope you have a great weekend. I will be writing an article, and we'll let you know when it's available to read. Thank you.